going. Kia ora everybody, welcome to Community Network's Aotearoa's web event on financial health for for-purpose organisations, more commonly known these days as not-for-profits, but we prefer the positive for-purpose. To begin with, just to open this session, I'll start with the karakia. Whakataka te hau ki te uru, whakataka te hau ki te tonga, kia mā kina ki uta, ki mātaratara ki tai, kia hi aki anei ta atakura, he tio, he huka, he hohu, ti hei Māori ora. My name is Patrick Davies. I'm the Engagement Officer with Community Networks Aotearoa, commonly known as CNA. I will be blanking during this, so we leave it to our panel. So you'll see that I'm actually using Roz Rice's machine. Roz is our Executive Officer who sends her apologies. She's at a rather important meeting with the head of the Social Investment Agency, Andrew Costa. So she really would love to have been here. And we're thrilled that to have so many people to have registered. It really is a hot button topic. So just very quickly, we have this web event in 3 parts. We'll leave it to the panel to have a discussion from their perspectives to begin with. We'll then move on to some of the questions that have been sent into us. And for the last part, we'll take on live live chat. One thing I'd say is use the Q&A section for any questions that you have. I'll keep an eye on that. And I also would like to say that we're not presenting legal nor financial advice at all. Going to be really clear about that. This is a conversation from different perspectives with years of experience. So less me, more you. I'd just like to say thank you to Chris, Fiona, and Garth for agreeing to support this initiative and creating the conversation. Garth is going to facilitate that. And so Garth, I'll hand that now over to you. Thank you so much.
Yeah, thanks very much, Patrick. And the image of Roz who appears before us. Take up your tea and coffee, or something stronger if you're more inclined, and relax, and welcome to this conversation. We're just going to briefly introduce the 3 of us, and then we'll be focusing mostly on your questions and topics that you'd like to put to us. So think about the things that are troubling you and add them into the chat room so that we can deal with that, the panel can deal with those questions. So first, I'm just going to ask Fiona to briefly introduce herself, and also to maybe tell us what she wishes someone had told her before she became involved with non-profits, or just her top couple of handy hints for financial hints for not-for-profit or community benefit organisations. So over to you, Fiona, first.
Thanks, Garth. Kia ora koutou, everyone. Thank you for joining us this lunchtime. My name is Fiona Brennan. I'm the Chief Executive Officer and General Manager, Jack of all trades, at Auckland North Community and Development. So we're based in the Auckland region. We are a regional anchor organisation operating for over 50 years. And we support organisations and groups to build their capability and capacity through their life cycle. My background is in not-for-profit organisations of all shapes and sizes, both here in New Zealand for the last 16 years, and prior to that in the United Kingdom. What do I wish that I had been told when I joined a not-for-profit when I entered into the not-for-profit sector? How much time I would spend looking for money, and then how much time I would spend monitoring the expenditure of that money and ensuring that our programs, courses would remain viable and sustainable for the long term. Top tips for me. One of the programs that our organization runs is we run a community accounting program that is available for all not-for-profits in Aotearoa to participate in free of charge. It's a free confidential service that provides free accounting support with the ability, with the help of chartered accountant mentors, and final year master's students and final year accountancy students at Massey. We that program is incredibly useful to not-for-profit organizations who often, and leaders who often do not have a background in accountancy. And I believe that building that accountancy, basic bookkeeping knowledge and so on can be really useful for people at all levels in the organization. My top tips for running an organization is you can't stop that process of monitoring. It's not enough just to set the budget once and forget about it. You need to kind of, especially in a fast changing environment, you need to be constantly looking and making sure that your budgets and your programs are viable for the current environment that we're operating in. And secondly, I'd say education and awareness, trying to build the capacity of other people in your organization to understand the financial environment in which we're operating in, and to see the connections with the programs and services that you are undertaking. So that's me. Thank you.
Great. Thanks very much, Fiona. And just before I hand over to Chris, just a reminder that I see we've got about 55 people on board at the moment. And we'd really encourage you to introduce yourselves and where you're calling in from for today, which is great. People have already started doing that. But we'd also like you to pop your questions in there, because we want to respond to the issues that are important to you. So your questions, concerns, or comments about matters financial, we're really looking forward to reading those in the chat room as well. But next, Chris, who are you and what worries you?
Kia ora koutou, ko Chris Glaudel toko whenua. I'm the current treasurer for Community Networks Aotearoa. I think I've been in that role 4 or 5 years now. And for my day job, I'm the deputy CE with Community Housing Aotearoa. And I guess my background in the for-purpose, not-for-profit sector goes back to work in volunteer roles in the U.S., in California, and has continued here in Aotearoa for the past 13 years. And across that time, I've held a number of roles, including treasurer for a number of organizations, both larger and small. Budgets in a checkbook that you can count the transactions in the year on a couple of fingers, to larger national organizations with $1 million in revenue and thousands of members. And I guess what advice would just be to enjoy it and to pull people in. I think in the for-purpose sector, a lot of people are willing to contribute if they're asked. And I think finding those people with the skills and expertise you need is often just a conversation away. I know that's how I've been pulled into a number of roles before. And in terms of some of the tips or things that I've learned along the way, one is not everybody really enjoys numbers or interacts well with them. And I guess, some people are musically inclined, some people are, artistically inclined, others are inclined with numbers, and some just aren't. And you can't change that, but it's important that you find a way for them to engage with the numbers and with understanding your budget and your finances. Look at it as an opportunity to connect in different ways. And what I have found in roles where I was on a large board, and some people were very into it, had accountants backgrounds, and others just that they had different interests, and utilizing graphs and charts enabled them to see things visually in a way that the numbers, they just couldn't look at a long list of income and expense and understand. And so I think it's important, whether it's with your governance, with your funders, I think more importantly, with your own kaimahi, that they understand the numbers and what they mean. And if just simply printing out a income statement isn't working for that, think about other ways that you can present the information in a way that's accessible to them. And a couple of other things, audits or financial reviews, they come up once a year, but the work is really year round. especially after the introduction of the statement of service performance and needing to quantify what you're doing and the outcomes that you've achieved. Much easier to do that if you have a running tally of those things that you update either monthly or quarterly. At community housing, we run a lot of online engagements, and we try at the end of each of those to capture right away how many people were in attendance, what organizations were represented, and so that we don't have a scramble going back 9 or 10 months or longer when it's time to present the evidence or to back up the evidence for our audit. In terms of budgeting, I would say really always be thinking ahead about who will be needing information in the future. I've stepped into roles where there was not a lot of information about why we had budgeted for certain things. And so doing a simple annotation, which is just looking at the line items that show up in your budget document or in your audit, and doing a short narrative to explain what goes into that, what should be there. That'll help staff to understand if they have specific activities that they're implementing that are grant funded, where to look for those, and to ensure that everybody has clear visibility that if we say, oh, I've got contracted expenses budgeted at 100K, but staff have 130K across 4 programs. If they don't have that clear visibility, you're going to find yourself in difficulties in fighting for resources when that budget starts to be fully expended. And so I guess those are some of the tips. And when it comes to that idea of overspend, I think a lot of us in this sector and a lot of governance often have an aversion to budgeting a loss. And I think that's something that needs to be discussed. And budgeting for a loss isn't necessarily a bad thing. If it's, say, a one-time event that's occurring and you have the reserves to cover that, making a conscious decision is where it should be. It shouldn't be that at the end of the year, you receive a financial report that shows you've lost money for the year and nobody knew it. And you're sitting around the governance table and saying, how did this happen? So I think what's important is just to maintain that communication and make sure you know where you're going. And when it comes to those financial reports, I've also experienced in my work environment in housing where you can have reports that are technically sound, but are practically useless for the people that need to understand the information. And as an example, we operated a large number of properties. We had property managers that were responsible for collecting rent, overseeing maintenance, and the financial targets, the budget targets for, say, an 80 or 100 unit apartment complex. And we switched accounting systems and went from providing them with cash-based reports where it was clear income in, income out, to an accrual setting that included a lot of non-cash items of depreciation, amortization expenses, things that they didn't have control over and didn't impact on the cash. And they simply weren't provided with training, and nor did their jobs require them to understand financial reports in that manner. It was great for me as an asset manager. It meant that I had reports that I could send off to investors, lenders, regulators that met their requirements of accrual-based reports. But it made for hard conversations with the staff that were responsible for other spend because they couldn't actually see what was within their control and what was outside of their control. And so I guess, it's looking at that and making sure that the people that need the information, especially if they're overseeing, say, grant-funded programs with requirements to report, have something in a manner that's accessible to them and clearly shows what they're accountable for and responsible for, so that they can focus on that. And you can have good conversations about where you're at and how you're tracking on the commitments that you've made to deliver, and also on the resources required. And so I think, most accounting programs now, Xero and the other ones, they have ways to set up fund-based accounting, where you can track things by a specific activity and utilize those. And if you're not sure how, reach out. I think Fiona could probably put you in contact with some, smart students that could help you set those things up and make your lives easier. Because that's really what you want to have is people that are well informed, have the right tools, giving them the right information. And if it's not there, you need to seek it out. So I guess, Garth, those are some of the things that I've learned over going on 30 years in various roles in this. And yeah, and hopefully there's some other questions and we could shine some light and share experience.
Yeah, no, great. Thanks very much, Chris and Fiona. So just to introduce myself as well, my name's Garth. My pronouns are he, him. I'm one of the directors of the Leeds Centre for Not-for-Profit Governance and Leadership. And we've just celebrated our 10th anniversary of supporting and encouraging non-profit leaders across the Motu and in the Pacific. We do that through training, coaching, and facilitating organisational development. We particularly work with boards and with managers or coordinators of organisations, but anyone who has a leadership focus. So that often brings us into contact with financial issues. And when I was thinking about it before today, I thought of my five top tips from my experience of working with hundreds of organizations across the years. My first one would be, don't leave it to the treasurer. We need to remind ourselves that the whole board is responsible for the finances. The treasurer can lead, but we all need to take account of what's going on with the finances, so that if we don't understand it, five of the most important words we can ever say is, I don't understand that, thanks. And keep asking until you do understand, because legally you're responsible. Everyone is responsible, not just the treasurer. We can't delegate that oversight role. And it's good to include people with above average financial nous on your board, but not to abdicate responsibility to them. Let them help you all understand. I think the second thing that I would say, and I'm particularly reminded, this is nothing to do with Chris's background. He hasn't absconded with the money to a tropical island. But talking about fraud, I think it's handy to know that I've put a challenge to several meetings of accountants that I've attended over the years to say that I've never heard of an audit uncovering fraud. And if anyone would like to be the first, please tell me. And as yet, they haven't. Audits perform a number of important duties. But if you think that is the best way to stop fraud or embezzlement occurring, you're sadly mistaken. We need to have good systems in place, and we need to have a culture of whistleblowing, even on the most innocent things, because about 90% of frauds are detected by a whistleblower, someone else who notices something that looks a bit suspect. It's interesting, most nonprofits, when surveyed, say that they think fraud would be a terrible thing to happen, or embezzlement would be a terrible thing to happen to their organization, and that it is happening frequently in nonprofits, but most think it'll never happen to them. It's like when you ask people about their driving skills, most people think they're above average. It's just mathematically not possible. Most people who think fraud will not happen to them will at some stage be involved in a non-profit where it does. So it is a possibility. The third thing I thought of was that both of our speakers have already talked about the budget. And I think the budget is a crucial thing. I always like to say it's your most important policy and your most important strategy. So don't just leave it to the numbers person or to the treasurer or to the manager. Your budget sets your policy, sets your strategy. And that links with Chris's point about making sure the numbers actually link up with what you're trying to achieve, the purpose you're there for. So I think we should pay attention to that. I also like to say there's no such thing as overheads. I think this idea that some of our expenses are overheads, meaning they're less necessary, is a myth. Either our expenditure helps us achieve our mission or it doesn't. If it doesn't help achieve our mission, then we should not spend it. If it does achieve our mission, it doesn't matter whether it's the electricity bill or someone's salary or a payment for a piece of equipment. It's about what it achieves. And this idea that some things are program costs and some things are overheads is a really dangerous myth, and invented by people who don't actually understand how organizations really work. I think that leads into my fifth point. When we're talking to people who provide us with money, whether it's individual donors, philanthropies, government contractors, or whoever, we need to know the difference between price and cost. It's a business concept, but it's one business concept that I think we can usefully understand, that the price of something doesn't necessarily have to be the exact cost of it. We need to invest, we need to have a margin between the price we say something is involved in delivering and the actual cost to us, so that we can invest in future activities, so we can have buffers for when things go wrong, so we can pay for those times when we don't have the costs covered. It's an essential part of our sustainability to know the difference between price and cost. And I think it's worth having a discussion about that on your board or with your leadership team. Great. So that's our introductions. And now it's not all about us, it's all about you. We've got a couple of questions that have been sent in beforehand and a couple of questions that have come through already. I did ask people to put questions in the chat room. In fact, that was before I noticed we have a separate Q&A box, and if you put them in there, it's even easier to see what the questions are. So we've got one in each, but we'll do the questions that were sent in beforehand first. The first question was, when should we be concerned about an employee leave balances, not just as a financial liability, but for well-being reasons as well? And I think, Fiona, did you put your hand up to answer that one for us?
So we'll all have different takes on this from, you know, the wide range of organisations and people here today. My take on this is that I think it's really important to ensure the well-being of our employees. So if someone's not taking leave, then that's about having a conversation to find out why. And sometimes that can be some gentle encouragement to plan some leave. At a certain point, someone might be trying to save their leave up to take some extended leave later. Again, it's good to have a conversation so you kind of know that's in the pipeline or that's something that that employee would like to do. And of course, worst case scenario is sometimes you have to ask them directly to take leave at a certain time. We found things like we have a close down week over Christmas, New Year. Sometimes that's 2 weeks as well. We try to do that a little bit by consensus because we're only a small organization. Some larger organizations might need to kind of put some mandate that in some shape or form. But in general, I always think it's great if we can involve our employees in the decision making around that. And then financial policies, you can also, and policies about the extent of leave that employees can accrue. So for example, in our own organisation, employees can accrue up to 4 weeks leave, but no more than that. And that ensures that at some point they're required to take leave during the year. So I think it is really important from the well-being of the person, their ability to do their job well, having been able to take breaks during the year, but also from a financial point of view, trying to actually make sure that we're not accruing massive leave balances, which then become a big liability for the organisation. Yeah.
Great. Thanks very much, Fiona. And if any of us are answering these questions, if someone else wants to chip in, just of the other panelists, please do so. But otherwise, I'll just keep moving on so we can answer as many questions as possible. The second question that was sent in beforehand asked us to please update, if possible, the likely outcome of the recent IRD review on not-for-profits and the potential consequences of changes and what timing there might be around tax changes for non-profits. Well, I put my have to put my clairvoyant hat on for this one, but because a lot of this is unknown, but just to reiterate what we do know. First of all, the discussion paper that was sent out by IRD actually talked about 7 different tax changes. The most prominent and potentially the biggest one was around taxing the unrelated business income of charities, but it was only one of the 7. So there are 6 other ones that are lurking away there in the background. So far, there's been no official response from IRD on any of the 7, but the Minister for Finance has said that she won't be adding a tax on unrelated business income for charities in this budget. So that means we've probably got at least 12 months reprieve. That does take us closer to an election, which is not the most favoured time to tax people doing good. But I wouldn't put it past any government to do that if they really want to, especially an activist government like we have at the moment. So the battle has been won in stopping this being imposed, because why it is a battle is that it would have added a lot of compliance costs to a lot of organisations that eventually would have not had to pay tax. So that's just a lot of wasted effort to make no change. And that's why it would also not raise very much at all for the government either, which ultimately is why they decided not to go ahead in a rush. The other 6 changes we officially know nothing about. I suspect, and this is where my clairvoyant hat is back on, that some of them will start to sneak through because they went a bit under the radar the first time, and the government or the IRD might believe they can get them through fairly easily without opposition. And at least a couple of them we think are probably helpful rather than harmful, but there are others that have significant to-do damage. I think Patrick promised to send out links to several things, including our individual panelists' submissions on that proposal, those 7 tax proposals. Definitely, we covered all 7 issues in the one from Lead. So if you look that up in the link that Patrick sends, you'll find that out. The other thing that people might not be aware, again, because it's not been done with a lot of publicity, is that there is currently an exposure draft, which means they're just about to do it, but you get your last chance to comment, by IRD on taxing membership fees for the first time. For 70 years, non-profits have had this mutuality of membership principle apply, so that financial transactions among members, so that's especially subscription fees in incorporated societies and other similar groups, are not subject to income tax. But IRD is currently proposing to ditch that 70-year-old convention and to apply income tax to all of the transactions, including ones among the circle of membership, which would include things like subscriptions and membership fees. So you've only got a short time, I think it's the 30th of June, to make comments on that if you're worried about that. But have a look on the Inland Revenue site, their policy division, and you'll find information for what you can say about that. Did anyone else have any insights from the future on the panel?
Garth, I think you've covered it off well. I'd say what was announced in regards to the taxation on charities is that it was paused. The issues that have been driving it haven't gone away, and I think it's important that we all be mindful. And when we're engaging with any of your local MPs or with ministers, to have that kōrero about what you're doing and the impact that it would have on you. 900 submissions went in, and a lot of organizations really pointing out the unforeseen impacts, which was helpful in getting this pause. But I think there remains in some areas concerns about activities of organizations. And I think what's important is to separate things that may fall afoul of existing regulations, and not try to put a solution in when there's already a remedy that simply isn't being resourced to adequately follow up on the concerns that have been identified.
Yes, I think that's an important point.
At any point I would add to what's already been said quite comprehensively is around the trading income issues that potentially arise for charities, for some of that taxable income for sports societies and other small organizations who highly depend on that trading income from their social clubs and so forth, or from their membership fees. Same goes for professional organizations, professional bodies, which depend on their membership fees for their viability. Then these things could be catastrophic in terms of income for those organizations. And again, I completely concur with Garth in that there really is no upside in terms of, by the time the process is worked through, the upside for government is very small.
Okay, so we'll head on to the live questions now. The first one I'm going to pick up is from the chat room. Laurie has asked, from this session, I'd love to know where I can find templates for funding and sponsorship monitoring. Is there such a thing even? Do either of our panelists know anything about that? Fiona, how about you, from your experience?
Well, we will sometimes customize things for people through our community accounting program for templates for, say, managing their expenditure on a project or something like that. But we also find like using accounting packages like MyOb and Xero often have templates that you can use and amend. And similarly, there are many places, even charity services provide some templates and resources. NZ Navigator, I think that's another one, isn't it? There are a few different places where we can pick up resources. So.
Yeah. NZ Navigator is a great place to start looking on the net, and it's got all the old community net information there updated as well. So that's always a good spot to look. Chris, did you have any handy hints on this? You don't have to.
Those resources are excellent. The others is reach out to similar organizations and ask what they're using.
Right, yeah.
Or if it's with a funder, often, philanthropic organizations have set things. Lotteries has a set kind of format that they utilize. But I think what's important is to find, again, something and customize it, I think, Garth, as you said, to the needs of your organization, and don't just take something because somebody else uses it and works for them, and think that it'll necessarily work for you. And I think, and Great Fiona, did say, they provide that service. They can customize those based on the particular needs, whether it's an internal business need or an externally imposed need from a funder, lender, grantor.
Yeah. Templates are very handy in that you don't have to start from a blank page, but they can also be very dangerous in that they were designed by someone else, usually for someone else. And so it might slightly distort what you want to do. So you've got to be very careful when you use templates. They're double-edged swords. But I think, Laurie, you've stumbled into, or maybe you already deliberately knew, one of those important and complicating factors about not-for-profit accounting compared to commercial accounting. And that is our dependence and prevalence on restricted funds. That we have some funding that's tied to restricted purposes. Your average business does not. It's all income in, it's often all income in, expenditure out. So, you know, when someone buys the hamburger, they don't say, well, I'm buying this hamburger on condition it pays for the meat, but not for the oil. You don't kind of get that at the supermarket either. But it's a commonplace feature of not-for-profit accounting, where some particular projects or even some particular items will or will not be funded. So having a system for dealing with restricted funding is an important part of a good not-for-profit accounting system. And as I think as Chris said and Fiona reinforced, a lot of the accounting software now do allow you an ability to take into account projects, which is a way of keeping a track on restricted funding. So both Xero and MYOB do that, I know, and I'm sure others as well. Let's keep moving. The questions are popping in all the time. Chris, you've already put your hand up to answer this question by Alex, who asks, the greatest problem I have is putting the data into a format that lay financial people can understand. So how do you make it clear to the non-expert?
Yeah, I guess, and not knowing the exact circumstance, but I guess I have found that using, say, if it's income and expense or breakdowns of where, say, revenue is coming from and your main expenses, is pie charts often help. And so for our organization, for community networks, we have a larger government contract. We have some membership revenue. We have then earned income and other grants. And it does get scary when you look at it visually and you see that, there's a tiny sliver of earned income, of grants and donations, and a huge wedge of the pie that's coming from the government source. And so those are ways that visually you can present that information. And looking at the expense side, and Garth, I noted, there are no overheads, everything is an expense, but there are things that I look at as into buckets. And for most not-for-profits, your largest bucket of expense will be your personnel. And so your staff who deliver all those services. And then you have other expenses that I tend to call discretionary and non-discretionary. And those aren't exact. They're, it's not a black and white line, but things like an annual audit report, things like your accounting software or other specialized subscriptions that you have. Your rent, things that you just need to have to operate and function as an organization, that if you didn't spend, you wouldn't exist in a sense. So, putting those in an area, putting your staff in an area, and then the other things, how much you spend on travel, how much you spend on communications and marketing, those you have some more control over. And so I think, those are ways that you can visualize and put things in and really look at where your money is both coming from and going to in ways that could help people. So hopefully, Alex, it gives you some ideas. Yeah.
Great. Okay, thanks very much, Chris. The next question is from Anne. Do you provision your time in lieu, I presume it means? Do you provision your liability tracked by project, grant and contract?
Might need to clarify some of what Anne is asking there. My sense is that when you're tracking sort of liabilities or you're tracking costs across various grants and projects, we found it really helpful to just set up principles about how we do that. So, what kind of allocation are we going to make around maybe a specific staff group or program costs per month or per quarter, so that we kind of have some general principles. So we're not, the accountant isn't always having to check in and say, well, how much money shall we apportion to this grant this month or something. So setting up those principles in advance kind of means that, the day-to-day work of allocating costs is already there. Like there's a sense. So agreeing on those, what that looks like. And yeah, I'm not entirely sure about what aspect Anne you're looking at. Do you want to just maybe put another question in around that?
I think I may have an understanding. I
Yeah.
think, if you do allow time in lieu,
Yeah.
do you then formally record that in your financial statements against that as a liability for that specific activity? And I think, one, as Fiona said, hopefully you have in place abilities to do that if you choose to. The other is if you do provide, if somebody works extra time that's not being paid for, and you give them time off in lieu of that time that they've worked, that you have a clear policy on that, and that it specifies how much can be done under whose authorization. And I would also encourage that there's a time period in which to use that. And frequently that's like within the subsequent time period. And so then it really wouldn't need to be something that runs through your financial statements. It needs to be documented and recorded, but you could save everybody a lot of journal entries and accounting work if you had it something that was very clear and could be granted and then utilized within a short period of time, where it doesn't become a big liability going forward, because that then would become a concern if somebody's accrued in the circumstance that was asked before or mentioned. If somebody has 4 weeks of accrued time in lieu plus their regular time, that's a real red flag. Yeah, and in terms of the liabilities tracked by project grant, it would depend again on what's committed to under the grant. So if the grant is paying for a specific person's or a role's time to do things, I would think that yes, it would then be charged back to that. And if it were of a significant size that it became a liability for the organization, it should be tracked and tagged to that, so that when that liability is utilized and runs in through your income statement, that it's allocated properly against the source of the income or revenue.
And I think that allocating to projects and programs is really about my point that there's no such thing as overheads. Everything has to be funded from somewhere. And unless you have someone who just likes to fund overheads, and if you do, keep them a secret, because the whole world wants to find that one person. Someone has to pay for the audit. Someone has to pay for the board meeting costs. Someone has to pay for the CEO liaising with key stakeholders to keep support for the organization. So, and that should be shared across all of the programs, including liabilities. But I think Chris's advice that if you have a time limit on when people can take time in lieu, it doesn't become a big liability issue, and it should almost be so small that you don't need to worry about the complexities of having to record it. But unless it's a very big thing.
So some organizations have things like flexible fortnights, and that kind of works quite well because it allows people to take their time in lieu within that fortnightly period. But it depends very much on what each organization needs and how it operates.
And I see Ian has responded in the chat that we've pretty much addressed the question.
Yeah. Kōrero has reminded us that too much leave can also be a red flag for fraud, because serious embezzlers usually can't leave the seat, at least not for long, because their fraud can be found out. So it's a helpful reminder, Kōrero. Anne has asked another question, but just before we... Oh, sorry, Chris, did you want...
I was just going to say on that, that could be the case, but also you should have internal systems and controls that would find that. So if, and just from CNA, a small entity, there's 2 hired staff, a contracted comms person, and we have a third-party bookkeeper. All authorizations for payment require sign off from an executive committee member, typically myself as treasurer, plus Roz is the as the executive officer, and then every transaction goes from period to period between our executive committee meetings, goes as a list. So we review that, in the entire executive committee has that visibility of what those expenditures were. Now, if somebody's getting in and changing all that information and not doing it, in our circumstance, it would be a couple of people that would have to be involved in that. And so that it makes it harder, not impossible. When people really want to steal, they're going to find a way. But the point is to make it hard to do it easily and easy to find out.
Absolutely. So Anne has another question, but we're going to give other people a chance to ask their first ones first. So I'll go to Jeff's question, which is, would it make sense if you have multiple service-funded contracts to distribute proportionally fixed costs, i.e. rent, to ensure the true cost of providing the service is clear? My quick answer to that is yes. Don't let perfect be the enemy of good enough. So if you can divide so-called overhead or fixed costs up roughly, and you can divide them by a number of ways. You can divide them by share of the dollars of a program. So if one program is 60% of your budget, another program is 40% of your budget, then you can allocate 60% of your rent to one and 40% of your rent to other. Or things that are like rent that are probably more related to how many people you have. If one program has 5 people and the other program has 5 people, then you divide it half and half. If one program has 2 person in it and one program has 1, you might divide it 2/3 to one program and 1/3 to the other. You don't have to actually measure how much space those people actually use when they walk around the office. Just make a good rough estimate and make sure it adds up to 100%. That's my rule on that. Did anyone else want to add any other comments to Jeff's great question? No.
For me, I agree with your comment, Garth, that we need to definitely distribute proportionately, except for those grants. There are some grants which do exclude you adding certain costs. So
Yes.
we need to kind of be really clear about what's in the funding agreement and what we're actually able to allocate. But generally speaking, we do need to be allocating all of those kind of costs across our programs and services. So yeah, I think that's part of our program costing, to ensure that things are proportionately allocated. And maybe that's just an area that, as a not-for-profit, that we need to pay more attention to, is just really looking at our program costing, and as you referred to earlier, Garth, the program pricing. So effectively what we charge, or what we or what the price is for the program when we're actually applying for funding, so that we've actually priced in some of those sort of overheads which are often difficult to identify.
Right, and we also talk about it's sensible for organizations to have reasonable reserves preserved. So you can only do that by pricing more than you cost. That's an essential part of it as well. Okay, so our next question comes from KN. We provide capacity building and support for local community organisations in Palmerston North. We often receive requests for accountants to check financial records or oversee cash books to provide advice for small organisations that don't have in-house accountants. Do you know of any organisations or professionals we could refer them to?
Can I just answer that briefly, and then maybe Chris, you can add? We offer a free community accounting program throughout Aotearoa, and so organisations can be referred to that for free confidential accounting advice from chartered accountant mentors, and who can work with small groups of final year accountancy students or master students. So we can match a not-for-profit with a small group of students and a fully qualified chartered accountant mentor. Equally, there are chartered accountants who do provide some pro bono services, but they're often in high demand. So we can send information out about that program after the webinar.
And just, I think related to that, because it almost steps into the area of what they call umbrellaing, an umbrella organization that would do it. And I know Perry Field Lawyers has put forward a white paper around that. So if it's a circumstance, it looks like here where you're just asking somebody to double check, where a non-accountant is in a small organization, you're basically doing checkbook accounting and running it through a system just to check that that's correct. But if it is a situation where you have an organization that simply needs somebody to do everything, including managing their funding and paying the bills and setting things up, that's a different situation. And I believe there are organizations, I believe Trust Waikato, Holly Snape and the crew there, and maybe Social Link in Tauranga, so that may be available in your area. You would need to ask around to see who might be providing those types of services, because it does get complicated. Hence why lawyers had to put out a white paper just to kind of lay out the issues and ask, why is it so damn hard to do the right thing and not force everybody to hire an accountant? Editorial comment. And
good accountants who want to support you get overused. So it is hard to spread the love. Okay. So we'll go back to Anne's other question. Do you think we always have to defer income from grants or contracts that are paid quarterly or yearly? So I'm presuming, Anne, you're meaning grants in advance. And they, when you receive them in advance, they become a kind of liability until you spend them in accounting terms. So Fiona or Chris, have you got any particular advice or insights on that issue?
Chris?
I have insights, but the accountants and the auditors always rule on how that's done. So there are specific requirements around how on the recognition of grants, and it does to some extent depend on the language utilized in the grant. And if the language,
if it's repayable or not, yeah.
If it's repayable or not, it does need to be recognized in the year in which it was received, unless it spans a longer period and it specifies that a portion is for an additional accounting period. And so I'd say the best place to start would be to review your grant agreements and have the conversation with, if you have an audit, with the auditor or with your accountant about why they're treating it that way, and to confirm that the way it's being recorded is correct. But also in practical terms, one of the things that I find is say you get a $120,000 grant on the start of your fiscal year. And rather than recognizing $120,000 immediately, you recognize 10,000, 1/12 of it for the first month. It could be helpful because, again, depending on the level of understanding and financial understanding, you go to your first executive meeting and people see, oh wow, we're well ahead of budget. We've already got 120K. Let's add on some additional expenses. Or if the person that really has that financial understanding isn't at the meeting, some people could misinterpret the actual financial circumstances because you have obligations to deliver services over the course of that year. And so again, every organization's circumstances will be unique and the requirements. So it's actually asking those questions and ensuring that if you do recognize it all, rather than as income immediately and not reserve and a liability, that you are all clear in terms of staff and governance, that money has, that money has to last through the year, and there's not another source it's going to come in to backfill if it's spent on something immediately.
Or in the first month, yeah.
Let's all go to Fiji.
Yes, some good advice there. And I think that has neatly meant that we are finishing up, having answered all the questions that have come in. I don't think I've overlooked any questions. Patrick will contradict me, I'm sure, if I have. So congratulations, everyone, for asking some really cunning questions, and congratulations to the fellow panelists for giving some really useful answers. I learnt quite a bit myself this afternoon, and I hope everyone else did as well. I think it reinforces that money is not something just to be left to a few people to worry about, because it's quite central. It's the thing that surprised Fiona when she first joined the sector, that how much emphasis we have to put on raising the money and looking after it and keeping it coming in. And that's a truth. That's a truism about our sector. So we've all got to be concerned about this, take it seriously. But it can be understandable. I think that's the other important thing. And it's not ultimately a mystery. And if we don't understand, we need to keep asking people until we do understand, so that we can exercise that responsibility well. So I think I'll just hand it back to Patrick now.
Fiona, thank you, Garth. Thank you so much for facilitating this conversation, Garth. Really, really appreciate it. Fiona, Chris, thank you for analysing. I think I may have just made a word up, but that's necessity is the mother of invention when it comes to our sector. Thank you all three for your time, your knowledge. And I'd just like to say that this recording will be available on CNA's YouTube shortly, and we'll have a list of submissions, resources, and links so that you can follow those up. Always happy at CNA to hear from you, whether it be just to say hi or just if you have an issue that we might be able to help you with. There's our kaupapa to, if we can't help you, we'll point you in the right direction of those that can. I'd also like to invite any not-for-profits to look at our membership page in case you want to join our merry band and make our voice stronger in the sector. And our next web event will be Thursday, the 26th of June. And we're talking about advocacy, which for some people can be a dirty word in this sector, but we're looking at effective representation. How do you make your issue, your voice, your point really, really land? Again, it'll be a conversation from experience. So thank you to all of you who have come and joined us. Thank you to our panelists. And I'll finish here with a karakia. Kia hora te marino, kia whakapapa punama te moana, hei hau rahi mā tātou I te rangi nei, aroa atu, aroa mai, tātou I tātou katoa. May peace be widespread. May the sea be like greenstone, a pathway for all this day. Let us show respect and compassion for each other. Thank you, everybody. From CNA, goodbye.
Thank you.